More results now. Richard Friedland is the man. He's the CEO of Netcare. Netcare reported a 25% rise in its interim profit, as well as an 8.5% revenue increase to 13.3 billion rand. We spoke to Richard Friedland, the CEO, for more on these results. Here's that chat.
If you look at the UK results purely in pound terms, we've actually had a very good 6 months. So strip out currency, ignore the impact of that and the rand results. Purely in terms of the pound results, the UK has done well, despite, as you said, a very, very challenging macroeconomic environment. And so what you see there is margin expansion by some 80 basis points to 23.8 versus 23% in the last reporting period. And that against a background of increasing NHS cases. We're now doing 32% of our volume is attributable to public sector patients, which come at a much lower tariff and contribution, and also NHS tariffs have experienced deflation over the last few years. So a sign that the business is recovering, albeit off lower case volumes. So our case volumes dropped by 2%, the complexity of our cases went up by 3%, but BMI is now, or GHG is emerging as a very focused acute hospital provider and has had to weather a tremendous storm.
In fact, a lot of that focus has been on deconsolidation of the business. So run us through the kind of steps you've been taking, because it's working to strengthen your financial position to an extent.
Correct. So from an accounting perspective, we took a decision in November last year to deconsolidate the property assets that we owned in the United Kingdom. And prior to that, we consolidated those onto our balance sheet. And so what you're seeing in these results is a structural change in the sense that we no longer account for those and consolidate them, and we now have a rental charge coming through at the OpCo as a result of the fact that we are no longer consolidating the property assets. But as a result of that, it has clearly strengthened our balance sheet and given a far, most importantly I think for investors, a far more accurate view of what our real investment and the commercial reality of that investment is in the United Kingdom.
When it comes to that investment, you've highlighted that you're growing that exposure to the public realm, so to speak. How are you managing that exposure when it comes to public versus private healthcare within the UK territory? Because one assumes that the effect of austerity is going to have a bearing specifically on the national health scheme side of things.
Absolutely correct. And in fact, demand for healthcare services, demographic demand for healthcare services in the United Kingdom, given the aging population, given new technology, is about 3 to 4%. Yet NHS funding at the moment is flat, and the NHS managers are being told they need to save £20 billion. So a huge funding gap developing, we think, in the United Kingdom as demand increases against flat provision or financing of that healthcare system. We've seen a drop in private volumes, and we're very grateful for the NHS work that's come and compensated the drop in private volumes. And that's a result of the huge recession. The United Kingdom has lost about 1 million jobs in the private sector. So certainly we are well geared for a recovery in the private market should it come. And just to remind investors, when we bought this business in 2006, 97% of our work was private, 2 to 3% was NHS. Today, 32% is NHS.
How much of that optimism are you able to carry through to South Africa? We know that there's the prospect of a national health scheme, surfacing here in South Africa. We're still waiting to see that making a headway. But how positioned are you to leverage off that? We know that you've, gone down the PPP route in Lesotho specifically, and that as a pilot study in South Africa.
Yes, and I think that even prior to acquisition in the UK, we'd spent 5 years working with the NHS in developing these models of collaboration, cooperation, and providing services on a very large scale to NHS patients. So it's not a new phenomenon through the acquisition of GHG. What we've done in Lesotho, I think, serves as an incredible example of what's possible when the public and private sectors get together and put patient care and outcome first. So we welcome universal coverage, and we think it's an enormous opportunity for both the public and private sector to collaborate in providing greater and more accessible healthcare.
What exactly are you directing investment flow towards in terms of capex spend?
Okay, so we've given guidance that we'll spend probably about 800 million in South Africa. We're also going ahead with the construction of 2 new hospitals and bringing on 89 new beds in the second half. The capex for those 2 new hospitals is not included in that 800 million, but it is a sign of confidence that we believe the demand for healthcare in South Africa is going to continue. In the United Kingdom, we envisage spending about £40 million of capex for the full year.
Looking at South Africa, one of the biggest challenges you face is the Competition Commission and it getting tough. I mean, the private healthcare industry struggling to resolve key challenges facing the industry, we've heard reports saying, and the most pressing of which is pricing. How are you reading that scenario and how are you seeing it evolve?
Well, we welcome an independent and impartial review of the entire healthcare sector in South Africa. And if you looked at our results this morning, our tariff increases or inflation increases were 4.8%, well below CPI, and against a backdrop of nursing inflation, which is salary inflation, which is much higher, 7 and above. You can see that we've contained inflationary pressures. So we welcome an impartial and independent review.
Do you think that it's going to be tough to maneuver? I mean, should we have health industry players as a whole, whether it be your insurance providers, your healthcare providers, your pharmaceutical companies coming to the party and seeing a forcing of more vertical integration?
We'd actually welcome vertical integration. We think that that is pro-competitive. In our own environment, it's not considered competitive, but you have to look at the Brazilian model and elsewhere in the world where they've shown that vertical integration is indeed pro-competitive in the sense that a lot of efficiencies are achieved. And we would welcome that as an outcome from the Competition Commission. I doubt whether that will be the case, but we as one would welcome that.